do two stocks, discuss two trade reviews. The most popular request was for amzn, so we're going to discuss that. I think certainly a little bit more advanced, difficult stock. And so, of course, that was the most popular request, but we'll go over it. And we'll also go over FB, Facebook, which I thought was a relatively good setup from Friday. And traded that one more actively, so probably have some more to say about that. But Amazon is certainly a stock that I've, top 5 stocks in terms of that I've traded the most over the last 5-6 years. So I have a bunch to say on that. So let's start with Amazon. And here's the long-term picture on it. Basically peaked out last year in October in the 240s. Came off all the way to 170. Gapped up prior quarter's earnings to above 220. And you can see kind of in this range here over the last few months. And you can see on Friday actually it drove up on the open above 230 and then closed with the market very strong. So let's zoom in a little bit more on the action so you can understand what my thought process was coming into the actual the earnings. So here's 10 days, 30 minute, and so basically had trended up a little bit and then drifted down in front of earnings. And when the earnings were released, you can see initial reaction was a 15-point drop. And one of the most common things you'll see in Amazon, at least over the last 4 years or so, is when the numbers come out, even if there's an initial drop, quite often it fills that gap, whether it's right in the after hours or the next morning. There's just a lot of long-term players in this that think that they are Walmart in the next 10-15 years, and it's just bought. And so if we zoom in, actually before we do that, what I'll do is when I look at this 10-day, is I kind of look for important levels over the last couple of weeks. The first one that jumped out at me was this 226 right here, supported here back on the 19th, supported here again on the 20th. Then on the 23rd and the 24th acted as resistance. So when it opened, I wanted to see what it did at this level. Did it stop here and fail? Maybe it was a short back to the low 220s. Did it blow through and take out this resistance from back here on the 20th? And then the longer term line that I've drawn at 230. So what it actually did right on the open was it blew through that 230 with an opening drive. And that's what caught my attention, because it wasn't actually my primary. Mainly because I just didn't like this action in the after hours. It was a little bit wild, and I just thought there was FB and SBUCs were better setups for me in terms of seemed very low risk and seemed like they were going to be set up for at least 1 to 2 point moves. So that's why I was looking at them first. But when Amazon had the opening drive above 230, it did catch my attention, and this is what I did. So here was the drive. I had my alerts at 226 alert and 230 alert. 226 alert went off right on the open. 230 alert went off a few minutes later. And when I punched it up, it was around 232 and a half. And so what I was looking to do was buy it on a pullback here to 230. And that's kind of one of my favorite plays, when something drives strongly on the open through a bunch of resistance levels very quickly, takes them out in quick succession. I like to buy in a pullback, at least a quarter position, and then see what happens. So it did pull back, and I did buy it. Let's zoom in on it so you can kind of see. And this is where I bought it, right here. And you can see they quickly dropped it out on me, but came up very quickly. My stop was below 229, so I almost got stabbed out, but not quite. Came back up. Held a little bit higher, 229.50, and then there was a seller right here. I actually called this out on the desk. There was a 229.72 seller right here, and when that seller lifted, very quickly went to 230, and then eventually 230, 230.60. So that to me was the first opportunity, really. Good opportunity when it bottomed out here, when there was an identifiable seller at 239.72. You can see they sold here, they sold again, and then lifted, and then went up to 231 and moved sideways. The more conservative play would have probably been waiting for this bottoming out to happen this little bit of a higher low to happen, then the up move, and then the sideways. So a more conservative trader would have been looking to buy against this 231 here after it broke this initial pullback from the opening drive. Once that happens, what you're looking for is how much is this held here, and can it take out the prior high of 234. If we zoom over, again, I'm not going to talk that much about it, because really that was this initial pullback trade and getting in and selling in into this up move was really the only trade I made. And it really probably was more about I didn't want to deal with such a stock that was, I don't know, acting a little bit crazy compared to the other things I was looking at. Just looking at the price action from the rest of the morning, you can see that, I don't know, 5 or 6 times it popped up here to the 234.60s. Once, twice, 3, 4, 5, 6, 7, 8, 9 times. Formed a little bit of a wedge here. I'll just move this line up here so you can kind of see what that looks like. Actually, wedges like this that have upward sloping wedges, they have a tendency actually to break to the downside. And so that's not exactly the most bullish thing. Here's a 2-minute. And so you can see it kind of broke to the downside here. I'm not saying I would have shorted, but just this, as I saw this wedge here, I would be thinking cautiously, hey, this thing is probably, if it breaks to the downside, maybe it's going to pull back a few points. Anybody who was long from here in the initial drive or even on this pullback and was looking for this to kind of hold higher and then trend up, probably just stopped out, depending on how much room they gave it, below this 232 right here, around a little bit after 11 o'clock. So this is very difficult. You might have been buying into this pullback here at 233. It looks like it's supporting, breaks to the downside, tries to come back up, breaks lower, and consolidates, breaks lower. I would think that this right here maybe even got some people short. And with the market moving higher, it started to eventually trend higher for the day, but not particularly clean. Unless you were in really early from this opening drive or this initial pullback when I got involved, there were a lot of reasons to either be stopped out of it or even play it on the short side right here. From a bigger picture perspective, it's above 230. I probably wouldn't be looking to play it on the short side. One other thing I want to point out, when you do have this morning resistance area, you should draw a line like this, and if it ever starts consolidating above this level, that's where you can look to get involved. I think that traders on the desk who are trading it waited for this tight consolidation right in here. They noticed this around right above 235, and I think this is where people were able to capture some money, because it eventually did move up 3 points from this level. When stocks are acting, you know, some variability here, you can see it's moving up and down 50, 60 cent ranges, even pulls back a few points, but you want to really see these tight consolidations above the morning range. When you see tight consolidations like this, when you can risk 30, 40 cents, which is a small amount in Amazon, that's where you want to get involved. So this one right here, this one right here, and even this final one after 130 above 236 was pretty good. But overall, I don't think it was the easiest stock to trade in the first couple of hours because of this down move here and then the consolidation lower and the break to the downside. I thought after 12 o'clock, the tight consolidation here and here were pretty good, and that's where I think most people made their money who traded it on the desk. I don't think too many people were in this opening drive. Let's take a look at FB Facebook. This is something that I was more actively involved in. I kind of like this setup. Let's go in the longer term. So here's, they did their IPO, came out, it was in the low 40s, came off to $26 a share, drifted higher a little bit over a month ago into the low 30s, and then started to sell off back here on July 16th, came off again with the weakness in Zynga on the 26th, sold off from $28 a share to $26.80, and then they reported earnings, and there's a couple of reasons why I really like this setup. Number one, the numbers came out. Here's the sell-off from Zynga right here to 27. The next day it kind of just drifted between 27 and 28. The number came out, and after the number came out, it wasn't that bad. And actually, you can see initially had a positive reaction, went up to $29 a share. So people when the number first reported said, hey, we were expecting something really bad, it didn't come out, and they initially bought. Then pulled back to 27.5 here, and then started to move higher up to 28. And then what happened was after 411 or so, it started an after-hours downtrend, trending from about 28 to 25.80, which had been the previous low since the IPO, and then had a second wave of selling after this little retracement here, down to $25 a share. And then this is where most of the guys who traded in the after hours on the desk got involved, was in this 25.50 area. It was in a clean downtrend. They noticed, I guess, they were selling here in the 50s, put on shorts, and then looked for the next downtrend, and that was the right play to do. Came off about another point from there, consolidated again, couldn't get above 24.80, came even lower, and overall, we're still looking at the after hours. You can see eventually bottomed at around 23.80, drifting up about a buck or so there to this 24.80, where it had trouble on the initial downtrend. So overall, in the after hours, when they reported, it was a really nice trade on the short side, and we came in the next morning. And the way that we look at these trades here is we want to see what is it doing after the initial drive, like this, and then here's a retracement high, and where is it when we come in the next morning? And when we came in the next morning, it was below this after hours low, so the initial trade in the pre-market, people were looking to trade it on the short side, and they were rewarded. And again, I'm not trading in the pre-market, I'm getting ready for the morning meeting and talking to the desk about what they should be thinking about for the open, but guys who were trading in the pre-market traded this on the short side, and that's what we did right up until the open. Now, something that caught my attention right on the open, and again, I was trading it short right on the open, was, so here's our market open, right at $23 a share, and I have this line right here. So generally when a stock is weak, and I'll compare this, let's say, to NFLX, Netflix, which got crushed, I guess earlier in the week on earnings. Netflix, the number came down, it got crushed. The next morning we came in, it was below this line here, right on the open. It attempted a pop, touched this line, the equivalent of this line, which I think was around $66.50 a share, and then they crushed it and made new lows, and it trended lower. Something a little bit different happened here in Facebook, which is right on the open, it had its little up move, tried to make a new low, couldn't take out the pre-market low, and moved higher, and this was fine. Everybody looked to short into this retracement here, myself included, and then it came back down and made a higher low, and then it started to hold higher and higher, and then we said to ourselves, you know what, this stock, it's not a momentum stock in the sense of like a Netflix or a CMG. There aren't a lot of momos trapped in it. The stock has been weak since really the IPO happened, and maybe this is starting a bottoming process. The numbers weren't that bad. The initial reaction after the numbers was positive, slightly positive, and so maybe some people down here at $22, $23 a share are actually starting to buy it, and maybe it does retrace all the way back up to this 24.80 area, or maybe even a little bit higher. And so we started to look to trade it on the long side, and let me show you where that was. So right here, we zoom in on it, you can see that bottoms out right here in the pre-market, touches it, holds a little bit higher here in the 23.70s, then starts to hold a little bit higher here at 23.90, and this is where I started to get involved on the long side. And I put my stop below 88 cents a share, and was looking for a break above this 23.20 to be a little bit more constructive on it on the long side, possibly add to the position. And what happened was it failed here at 23.10 a couple of times, and I got stopped out right here at 10:52 in the morning, 86 cents. I think my stop was below 88. So sometimes, look, you get stopped out by a couple of pennies. So what I wanted to do was, at that point, sorry for the background noise, it's getting a little bit loud here, people filing into the office, it's almost 8 o'clock, and I was looking for basically a move above this line right here, and if it did, I wanted to pull back, I wanted to buy into a pullback to 23, again with a stop below 85 cents to even give myself a little bit more room from where I got stopped out prior. So I pulled back, I bought here at 23.02, and then it broke to the upside. So here's a 5-minute chart. Again, this is really important. One of my mentees, a very good trader, had a lot of size on this trade. He noticed something on the tape. It was holding above 90 cents. He bought 3,000 or 4,000 shares, and he sold half of them into the little bit up move. He got stopped out, and he was worn out from losing money in that trade and a few other trades, and he ended up missing this entire up move, which was 1.5 points. You can always get back in if you're not as comfortable. Put on half size or put on a quarter size. If you were in with a few thousand shares, go in with 1,000 shares the next time. Wait till the trade's really working, and try to find a way to build size once the trade is really working. Sometimes, we like at good prices to get in aggressively and have, a decent amount of size. But if you've tried a stock once or twice and it didn't work at that initial entry point, go smaller, make that stock work for you. And then my definition of work was, and I think I tweeted this, was if it gets above 23.50 and starts consolidating above there, that's where a spot where you can look to add when you're comfortably a half point in the money. So let's zoom in on the price action. So as the initial up move, I buy into this pullback, it drives higher, and this I thought right here, this move right here and on the 2-minute, where initially you can see it fails here at 60, comes back down to the 40s. I think this is where I was looking to buy here, and then the low to mid 40s got hit here, moved higher, started to hold above 50 cents. The trade started to work. I thought the most conservative thing to do was, after it finally took out this little spike here at 23.63, was to look for some type of hold above here for a move to about 24.5. And we saw that it moved up into the 80s. It pulled back here, started holding above the 63 cents, and so this was a responsible spot to add to the position. You could have had stops below 60 cents and below 50 cents for additional shares, so that's right here. And again, how much would you add here? Let's say you bought 1,000 shares down here at 23. You might look to add another 1,000 shares right here in the 60s. If you saw like a very concerted buyer right here in the mid 60s, let's actually go to the tick chart for you. And so here it is. Pulls back, and there was a concerted buyer right here at 67 cents. So if you really got aggressive in terms of getting, more than doubled, maybe tripled up your shares here, you'd want to keep this pretty tight. So if you see the buyer here and you tripled up, you probably wanted to hit half of those extra shares when that buyer dropped right there, and maybe a stop for the rest below 60. And in this case, maybe if you bought a lot of extra shares, you stopped out of some of them here, but at least it never dropped 60, and you had a nice move up to $24 a share. Had trouble here. This is a spot where I would be looking to lighten up. In fact, I did lighten up my trade into 24, and look to reload if you get some sort of long period of consolidation right above the whole number. Here is a 15-minute view, and we can see it basically trended right up to this 24.50. Going back to yesterday's after hour, here was the big down move, here was the consolidation. Had a lot of trouble here at 24.70, then at 24.50. So I sold into this move here, into 24.50. The risk reward to me at that point was not great. This was an area where it failed in the after hours the prior day, and so I got flat into this. I know some traders did get flat into this and actually also started to look to short it. I thought that was a little bit early. I thought for more experienced traders, maybe they could short into this. I'm looking for a pullback to 24. But I thought the real short, in terms of a change of direction and change in momentum, was after it pulled back to 24 and started to hold below. And this is where the more conservative traders actually traded this downtrend here. At the end of the day, they did pop it back up, and it was kind of from this area where it broke out from in the morning. And again, for me personally, even though it's trending lower at this point, in a strong market, in a stock that showed me a lot of strength and a breakout from right above 23, I'm looking to cover into this, and I think most people did look to cover at 23.40, 23.30. Right at the end of the day, pops back up towards 24. For today, when we talk about it in the morning meeting, I'll talk about this 24.50 level up to 24.80. What does it do in this area here? Does it fail again, or does it blow through and start holding above 25? If it does, we'll look to trade it on the long side. If it fails in this area again, we'll look to trade it on the short side. So that's really it for today. Thanks for joining us on this trade review, and we'll do another one next week.